1. Crypto Week, House prepares, Core Scientific tumbles, Bit Digital ditches Bitcoin. 2. CoreWeave acquires Core Scientific in $9 billion all-stock deal, AI cloud powerhouse expands. 3. CoreWeave's $9 billion Core Scientific buy, AI boom reshapes Bitcoin miners. 1. Crypto Week, House prepares, Core Scientific tumbles, Bit Digital ditches Bitcoin. The U.S. House of Representatives gears up for a pivotal crypto week, while the crypto mining sector faces turbulence with Core Scientific stock plummeting and Bit Digital's decision to abandon Bitcoin mining. This week could redefine the landscape of cryptocurrency regulation and investment. According to Investors Business Daily, the information provided is strictly for educational and informational purposes. It should not be interpreted as a direct offer, recommendation, solicitation, or rating to purchase or sell securities. The data is sourced from what we believe to be reliable channels, but there are no guarantees regarding its accuracy, timeliness, or appropriateness, especially concerning information found in closed captions. Past investment performance does not predict future outcomes. But here's where it gets controversial. The crypto industry is often seen as a high-risk, high-reward sector, and the decisions made during Crypto Week could have far-reaching implications for both investors and miners. For instance, the fall of Core Scientific, once a leading player in the crypto mining space, highlights the volatility and unpredictability of the market. And this is the part most people miss. While some companies are struggling, others like Bit Digital are making strategic exits to mitigate losses, which could signal a broader shift in the industry. It's important to note that the authors and presenters of the content may hold positions in the stocks they discuss. This disclosure is crucial for transparency and to avoid any potential conflicts of interest. The information provided is subject to change without notice, and we encourage users to review our terms of use for more details on how to utilize our services responsibly. For real-time pricing, Nasdaq Last Sale provides the latest figures. However, it's worth noting that real-time quotes and trade prices may not come from all markets, which can affect the overall accuracy. Ownership data is courtesy of LSEG, and estimate data is provided by FactSet. Investors Business Daily, LLC owns several trademarks, including IBD, IBD Digital, IBD Live, IBD Weekly, Investors Business Daily, Leaderboard, Market DM, and Market Surge. These marks are protected under copyright law. What do you think about the future of cryptocurrency? Will the decisions made during Crypto Week have a lasting impact on the industry, or will they be just another blip on the radar? Share your thoughts in the comments below. 2. CoreWeave acquires Core Scientific in $9 billion all-stock deal, AI cloud powerhouse expands. In an industry-shaking move that could redefine AI infrastructure, CoreWeave is swallowing Core Scientific whole in a jaw-dropping $9 billion stock swap. But here's where eyebrows raise. Despite the blockbuster valuation, investors immediately slammed both stocks. Let's unpack this high-stakes tech marriage and why Wall Street's initial reaction might be missing the bigger picture. Picture this: Michael Intrater, CoreWeave CEO, seen testifying before the Senate Commerce Committee last May, just announced the acquisition of data center powerhouse Core Scientific. The all-stock transaction positions CoreWeave to dominate the AI infrastructure race, yet in Monday's trading, CoreWeave shares dipped 3% while Core Scientific plummeted nearly 18%. And this is the part most people miss: that sell-off happened despite both stocks surging just weeks prior when acquisition rumors first surfaced. Why the market skepticism? Intrater suggests investors need time to connect the dots on CoreWeave's grand vision. The real bombshell? This deal wipes out a staggering $10 billion in future lease obligations. We're not paying rent for the next 15 years, Intrater revealed to CNBC, a move that fundamentally rewires CoreWeave's cost structure. Now, let's talk scale. Post-merger, CoreWeave inherits 1.3 gigawatts of operational power capacity across Core Scientific's U.S. data centers, enough to power over 1 million homes, with another gigawatt available for expansion. CFO Nitin Agrawal clarified that 840 megawatts already support CoreWeave contracts at 5 sites. But here's where it gets controversial. Core Scientific's crypto mining business, responsible for 89% of its Q1 revenue, now faces an uncertain fate. CoreWeave can either sell it or repurpose those facilities for AI workloads. A pivot in trader claims is cheaper than building new data centers from scratch. Speaking of finances, Agrawal hinted this deal unlocks access to infrastructure-focused funding at potentially lower capital costs. That's crucial when CoreWeave's short-term debt carries a hefty 10.1% interest rate. Meanwhile, Core Scientific, which only emerged from bankruptcy in 2024, has been quietly shifting toward high-performance computing. The two companies share history, collaborating since 2018. The timing speaks volumes. Fresh off its March IPO, CoreWeave stock still trades 4x above its Nasdaq debut price despite the dip. InTrader recalled early skeptics who insisted they should build their own data centers, a tough sell back then. Fast forward to today, with nearly $1 billion in quarterly revenue, CoreWeave now develops proprietary data centers while battling giants like Amazon Web Services. Hyperscalers mix owned and third-party infrastructure for good reason, InTrader noted. Those same principles apply to us. Now, the deal mechanics. Core Scientific shareholders get 0.1235 CoreWeave shares per owned share, a $20.40 valuation representing a 66% premium to pre-rumor prices. Yet after closing, expected Q4 2025 pending approvals, they'll own under 10% of the combined entity. And here's the kicker. CoreWeave actually tried buying Core Scientific last year, but got rejected. Makes you wonder, what changed? Was Core Scientific's crypto-heavy model becoming unsustainable as AI demand exploded? Or did CoreWeave's soaring stock make the offer irresistible? So we turn to you. Is this a visionary consolidation that positions CoreWeave as an AI infrastructure kingpin? Or an overpriced gamble on converting volatile crypto operations into reliable AI workhorses? The market voted with sell orders, but smart money knows infrastructure plays unfold over decades, not days. Drop your take in the comments, game-changing synergy or risky bet? 3. CoreWeave's $9 billion Core Scientific buy, AI boom reshapes Bitcoin miners. A seismic shift is taking place in the technology sector. NVIDIA-supported cloud computing powerhouse CoreWeave has just announced its decision to acquire the cryptocurrency mining firm Core Scientific in a staggering all-stock deal valued at $9 billion. This bold move arrives at a time when companies that build AI infrastructure are racing to secure the energy and data center capacity needed to meet rapidly growing computational demands. At the heart of the deal lies an urgent need. AI companies are scrambling to expand their computing resources, a demand that Reuters has highlighted. What makes this transaction especially intriguing is that it repurposes the energy-intensive facilities and power contracts originally established during the crypto boom. By integrating these assets, CoreWeave expects to eliminate over $10 billion in future lease obligations spread over a 12-year period, a financial relief that speaks volumes about the strategic nature of the acquisition. Digging deeper into the specifics, Core Scientific's shares have been valued at $20.40 each, which is approximately a 66% premium over the stock's closing price before the news broke in late June. Core Scientific shareholders will receive 0.1235 newly issued CoreWeave shares for every share they hold. The market reacted quickly. Core Scientific stock plunged by 22% in morning trading, while CoreWeave's shares dropped by 4.5%. The final steps of the deal are expected to be completed in the fourth quarter of this year, at which time the final pricing will be finalized. And here's where it gets controversial. Traditional Bitcoin mining operations are not simply relics of a bygone era but are now evolving to support the AI surge. Bernstein analyst Gautam Chugani has pointed out that this acquisition could set a new benchmark for Bitcoin miners looking to pivot into artificial intelligence. However, critics still argue that the persistent challenge of securing a reliable power supply remains the biggest obstacle in expanding AI data center operations. CoreWeave's transformation is a story of reinvention. Founded in 2017 primarily as an Ethereum-based miner, the company switched its focus to AI after Ethereum's massive 2022 upgrade known as the merge significantly reduced rewards for miners. This strategic pivot has paid off handsomely, with the company's revenue soaring more than eightfold in the past year. The evolution from a niche crypto miner to a leader in AI infrastructure exemplifies how agile companies can capitalize on shifting market trends. On the flip side, this deal also offers a critical turnaround opportunity for Core Scientific. After filing for bankruptcy in late 2022, driven by plunging Bitcoin prices and surging energy costs, the firm emerged early in 2024 and has since been eyeing the booming AI sector. Although Core Scientific initially rejected CoreWeave's takeover bid in June 2024, arguing that the offer undervalued the company, both parties ultimately reached an agreement that includes a series of 12-year contracts. Under one of these contracts, Core Scientific has pledged to provide approximately 200 megawatts of infrastructure, which will power CoreWeave's high-performance computing services. It is also noteworthy that CoreWeave, advised by Goldman Sachs, leverages an extensive network of data centers outfitted with NVIDIA-powered AI chips, and the company now carries a market valuation of around $79 billion according to Reuters. This impressive figure not only underscores the rapid evolution of the AI and cryptocurrency sectors but also fuels a debate: is repurposing legacy crypto mining infrastructure a masterstroke that could redefine the future of data centers, or does it set the stage for risky overextension in an already volatile market? What do you think? Can this innovative merger overcome the practical challenges of powering next-generation AI, or is it simply a high-stakes gamble built on older technology? Your thoughts and opinions are welcome. Let's discuss.